Good morning, Ma'am Alfia and everyone who will listen to our presentation video. In this presentation, we will explore the financial and operational challenges faced by PT Astra Agro Lestari, one of Indonesia's largest palm oil companies. Over the next few minutes, we will delve into their ongoing issues from land disputes and environmental concerns to financial reporting quality and sustainability efforts. Okay, so here's our group members. There are myself, Ananda Salsabila, and then the second one is Atika Dzakiyyah, and the last one is our captain, is Dzaky Farhan. Okay, so there is 10 topics that we will talking about in this presentation. So the first one is the case that will be delivered by myself, and then the next topic that I will deliver is the issue timeline, the theoretical framework, financial reporting quality, and warning signs check. And then don't forget the last one is the earnings quality analysis will be delivered by me too. And then the next topic about analytical tools and technique such as common size vertical, trend analysis, and common size horizontal will be delivered by Atika. And then Dzaky, our captain, will deliver financial ratio analysis, sustainability report, and the conclusion. Okay, so to get full access on our analysis such as our Excel and PowerPoint document, you can just please kindly scan this QR code, and they will launch the Excel and PowerPoint document. Thank you. Okay, before we start the presentation, I would say that by the end of this session, we hope to gain a clearer understanding of the complexities and potential solutions for improving PT Astra Agro Lestari's performance. Okay, so let's begin by discussing the case. Okay, so PT Astra Agro Lestari is one of Indonesia's largest palm oil companies, but surprisingly, this company has been facing serious allegations. These include land grabbing, environmental destruction, and human rights violations. Subsidiaries like PT Agro Nusa Abadi are accused of seizing community land without consent, clearing forests in protected areas, and operating without proper permits. Furthermore, intimidation tactics involving armed authorities have been reported, and the company has failed to resolve these issues despite global scrutiny. The situation highlights the need for stronger accountability in the palm oil industry. Also, these allegations have not only damaged the company's reputation, but also impacted its operations significantly. But in this presentation, we will be more focusing on land grabbing violation because it has the most and the biggest impact to PT Astra Agro Lestari's financial reporting. Okay, to understand the scope of these allegations, let's look at the timeline. So here, in 2022, Walhi and Friends of the Earth US accused PT Astra Agro Lestari of illegal land claims, environmental damage, and lack of community consent. And by March 2023, Walhi reported criminal charges against local farmers, further underscoring AAL's lack of legal compliance. And in July 2023, major brands like PepsiCo, Nestle, and L'Oreal suspended purchases from the company due to its environmental and human rights issues. And as I already mentioned about it before, despite these pressures, by July 2024, a follow-up report revealed more extensive violations by AAL, including illegal palm cultivation in protected areas, and it was without permits and sparking further backlash. Okay, so how about the current situation of PT AAL? So the current situation, there is a little progress had been made in resolving land conflicts or compensating affected communities. So this timeline will demonstrate the growing concerns surrounding AAL's operations. Okay, so next, to analyze this case, we use a theoretical framework focusing on financial reporting quality and earnings quality. Okay, so high quality financial reporting should comply with standards and provide useful information for decision making, like stakeholders. Similarly, earnings quality reflects how accurately profits represent a company's economic performance. We will also do the financial analysis process by using analytical tools and techniques like common size horizontal and vertical, and also using ratio analysis. This framework helps us to assess whether PT Astra Agro Lestari's financial data align with its operations reality. Okay, let's take a look on this financial quality spectrum. And to assess the quality of PT AAL's financial reporting, we use the quality spectrum as shown in the following figure, where this quality spectrum shown different levels of financial reporting quality. The lower you go, the worse the quality of financial reporting. So based on the level, the position of PT AAL's, there's some reasons why we conclude that AAL's was in their position, in that position. Here's why. So firstly, they are compliant with standards. PT Astra Agro Lestari prepares its financial statements following the Indonesian Financial Accounting Standards, which is PSAK, and which is aligned with the International Financial Reporting Standards, the IFRS, and this ensures consistency and the comparability with global reporting standards. And then the second reason is they are decision useful information. The financial data statements provide clear, decision useful information covering key metrics like profitability, liquidity, and solvency ratios. This includes detailed analysis of revenue, net profit, and financial ratios, which are critical for investors and stakeholders. And these factors indicate that PT Astra Agro Lestari operates at a high level in terms of financial reporting quality, providing decision useful, GAAP compliant, but low earnings quality. Why low? We will explain it more about the earnings quality will be covered after these slides. Okay, so to analyze PT Astra Agro Lestari's financial reporting, we are using the warning signs check also to find is there any warning that maybe appears at their in their reporting, financial reporting. So the first one in warning signs check is is there any overstatement or non-sustainability of operating income and or in net income. Okay, so as you can see, in 2023, PT AAL will experience a decrease in net income of around 5% compared to 2022. There is no indication that the company's income is being recognized aggressively or that channel stuffing is occurring. So this decrease is not signs as a warning. So this decrease in revenue indicates there is no overstatement or accelerated revenue recognition. Okay, the second warning signs check is there any understated or reclassification of expenditure. So as we can see from the gross profit margin and net profit decrease in 2023 that we already analyzed before, indicating that costs have been recognized appropriately. So there is no indication that large expenditures have been moved to the non-recurring or non-operating categories. So this is safe and there's no warning signs check here. Okay, so the next warning signs check is there any misstatements of balance sheet items. So there are no indications of glaring misclassification in PT AAL's financial statements. We already analyzed it before. And current assets and current liabilities are presented in the correct categories with a decreasing current ratio, but do not show any warning signs of incorrect classifications. Okay, so the last warning signs check is there any overstatements of cash flow from operations. So in 2023, there will be a significant increase in current liabilities and a decrease in liquidity ratio. But however, this is not show any signs of overstatement of cash flow from operations. So the decline in net profit and the cash flow pressure experienced by the company is in line with realistic operational conditions and doesn't appear to have been manipulated to increase cash flow results, especially in the operating section. Okay, so this is the income statement of PT AAL. We will analyze the quality of this income statement. So first things that we will analyze, so from the income statement that we will analyze is the net profit. The net profit in 2023 dropped by 39.38% compared to 2022. 39.28% compared to 2022. Also decline in profit in 2022 compared in 2021 by 13.32%. This significant decline indicates that the earnings quality in 2023 was under considerable pressure. So and then next, that if we are looking to their gross profit, the gross profit has sharply declined from 2021 to 2023. This reflects deteriorating operational efficiency and rising production costs, which have been directly impacted for profitability. Also, this indicates that the cost of revenue is increasing faster than the company's ability to generate revenue. Okay, so next, if we take a look to the general and administrative expenses, the general and administrative expenses was increased from 2021 to 2023. This rising cost further worsened the decline in earnings, demonstrating the company's challenges in controlling operational expenses effectively. And this increase in cost squeeze the company operating profit, which reduces the potential for net profit growth. Okay, the next thing that we can see, there's also a decline in profit before income tax. So profit before income tax also saw a sharp decline of 38.37% from 2,429 billion in 2022 to 1,498 billion in 2023. This significant drop illustrates that the company is facing a decline in its overall financial performance, impacting its operational results. Okay, so the last thing that we can see from this income statement is there is fluctuation in non-operating income, right? So there was a sharp decline in the share of joint ventures result. We can see from 215,627 million in 2022 to 19,835 million in 2023. This suggests poor performance from associate entities or joint ventures, contributing to overall decrease in net profit. So we can conclude the earnings quality of PT Astra Agro Lestari in 2023 is relatively poor, as evidenced by the sharp decline in profitability and rising operational costs. But the reduction in gross profit and net income indicates that the earnings generated from the company's core operations are not reliable for the long term. So it was not sustainability with this. So with a significant downward trend from year to year, it showed that they don't have a sustainability income for their company. It was because this case about the human violations and land grabbing cases, it was all impacting to the financial reporting quality.
Hello everyone, I'm the next presenter. My name is Atika, and now we are going to talk about the next topic, which is analytic tools and technique. So for those of you that want to see our analysis in details, you can click the link in the slide that I show you now, or simply scan the QR code that we put in our opening slide. Okay, for the beginning, This I show you the visualization of gross profit analysis. The graph illustrates the gross profit composition by product type for 2022 and also 2023. In 2023, CPO and its derivative contributed 93% of the total gross profit, amounting to 2.5 trillion, while kernel and others only contributed 7%. Comparatively, in 2022, CPO and its derivative contribute 90% of the total, and kernel only contributed 10%. This show a decrease in gross profit across both categories in 2023, with a slight increase in the share of CPO and its derivative and a decline in the share of kernel and others. This change highlights a shift in product contribution to overall profitability. Okay, for the next analysis is about the common size vertical analysis for income statement. As you can see in the slide, there are several highlights points that summarize the analysis, but to be detailed, I will mention 5 accounts that might be a concern to us. So the first one is declining the gross profit margin. As you can see, the gross profit margin is dropped from 19.8% in 2021 to 13.3% in 2023. If we want to see the connection to the land grabbing issue, this happened because the reputation damage due to the land grabbing allegation led to loss the premium buyers like Nestle, Pepsi, and others, and resulting in reducing profitability. Next, the second one is increasing the general and administrative expense. This expense rose slightly from almost 3% in 2021 to 3.6% in 2023. This happened because higher costs for handling legal disputes and also maybe lawsuit and conflict management related to the land issue. The third is declining finance costs. So we can see that the finance cost decreased from 1.6% in 2021 to 1.3% in 2023, indicating that the company reduced the borrowing. Likely reflects efforts to cut costs as their revenue and their profits decline due to the reputational and operational pressures. And the fourth is lower net income margin. So their net income margin fell from 8.5% in 2021 to 5.25% in 2023. This is happened because the unexpected costs such as the compensation payments and also the unresolved land related conflicts significantly affected the profitability. And the last one is spike in others expense. So this cost is increased from 0.4% in 2022 to the 2% in the 2023. This maybe happened because they spent more to fix their damaged reputation and deal with social issues from the land grabbing cases. So what we can conclude in this common size vertical analysis in income statement is the land grabbing allegations heavily impacted to Astra Agro Lestari's profitability by increasing their operational costs and reducing revenue as major buyers cut their partnership, and reputational damage drove into additional financial strain. Okay, moving on into our next analysis for the income statement, which is trend analysis. So there are also several highlights of this analysis. To be pointed out, there are 3. The first one is about sales and gross profit. They dropped due to the loss of trust and higher cost, and it's followed by operating cost increase in 2022 to fix their reputation and also handling the conflicts. And it resulting net income kept falling from the land dispute problems. So to be detailed, like we can see in the slide, that their sales is dropped due to the land grabbing issues that scared off their buyers like Nestle and also Pepsi. Some recovery happened in 2023, as we can see that their amount is increased, which means good. And moving on to the cost of goods sold, it still stay high because of the inefficiency caused by the land disputes and increasing the raw material cost. And next to the gross profit is decreased as higher cost and damaged reputation hurt the profitability. And for the selling and marketing expense, this expense is increased in 2023 to regain trust through the more marketing program and also the PR efforts. Next, about the general and administrative expense. This expense is rose in 2022 for legal fees, of course, and conflict management, but slightly improved in 2023. And next, for the finance cost is reduced as the company relied less on debt financing to manage their risk. And last but not least, the net income for the year is still fell sharply due to the loss of sales, higher costs, and also the unresolved of these land disputes. So the conclusion about this trend analysis for income statement, the land grabbing issues has still heavily impacted PT Astra Agro Lestari's financial performance by reducing their sales and increasing operational costs and weakening profitability, and also emphasizing the need for conflict resolution to stabilize their operations. Okay, now let's get into our last analysis for income statement, which is the common size horizontal analysis. Again, we can see that there are several highlights that we can point it out from this horizontal analysis. The first one is about the revenue declines. So the sales is still consistently dropped due to the reputational damage and lost buyers. And following by the rising costs, so the general and administrative expense is increased significantly because of the legal fees and also conflict resolution costs, and is impacted to the profitability impact. So the gross profit and net income is still dropped sharply due to lower sales and higher costs. And also the operational adjustment, which is the marketing expense, is increased in order to rebuild the trust, and other comprehensive income begin stabilizing in 2023 to recover from earlier losses. And if you want to see more detailed about the other account, we can see the first one about the sales. The sales is still dropped due to the reputation damage from the land disputes, causing lost contracts with major buyers. And for the chow gas, it still stay high because of the inefficiency caused by the land conflicts. And for the gross profit, it still decreased as high cost and reputation issues is reducing their profit margins. And we move on into the expense. The selling and marketing expense is increased in 2023, like I mentioned before, in order to rebuild the company's image and also attract the new buyers. And moving on to the general and administrative expense is also rising due to the legal fees and conflict management, but we can see that this expense is slightly improved in 2023. And next is finance cost. Finance cost is reduced as the company managed liabilities during the legal and reputation issues. And last but not least is about the net income. The net income is still kept falling because of the lost sales and higher costs, and also this ongoing reputation damage issue. And what we can conclude from this horizontal analysis in the income statement is the land grabbing issues has significantly affected PT Astra Agro Lestari financial performance by reducing their revenues, increasing their costs, and straining their profitability, with the sign of partial recovery in 2023 through their operational adjustment. Now we're moving on into the financial statement, which is balance sheet. The first analysis that we conduct is about the vertical common size analysis. And again, there are also several points that we can highlight in this analysis. The first one is the cash reserve that dropped in 2022 due to the high legal and operational costs from the conflict, but it slightly recovered in the next year. And for the biological and deferred tax asset is also declined, showing the disruption or asset write-down caused by the land disputes. And for the liabilities is increased due to higher financial obligation related to the land disputes and reputational issues. And same like before, if we want to see more detail per account, I will starting with the asset. So the first account is the cash and cash equivalents. is dropping in 2022 due to the high legal and operational costs from the conflict, but it's slightly recovered in the next year, which is 2023. And for the inventories, it stayed stable but showing a minor fluctuation, reflecting operational challenges from the land disputes. And for the company biological asset, is declined obviously sharply in 2022, following by a slight recovery in 2023. Is likely due to land restriction or asset write-downs. And for the mature and immature plantation, the company focus shifted to mature plantation to maximize output as the expansion is restricted during the land conflicts. And for the deferred tax asset is also declining, reflecting the adjustment due to the ongoing disputes and potential company tax liabilities. And moving on into the equity liabilities, the first account is the current liabilities. They drop in 2022 but decrease in the next year, reflecting company settlements, lawsuit, and fines. And for the non-current liabilities, it spiked in 2022, likely from increasing debt to cover the company costs related to land conflicts, but drop in the next year. And for the retained earnings, the company retained earnings is remain stable, showing that the company can avoid major equity losses despite their financial pressures. So from this analysis, what we can conclude in this vertical common size for the balance sheet analysis is the land grabbing issues is still causing the significant financial strain that we can see in the fluctuating cash reserves, higher liabilities, and also reduce in asset. The companies focus on more mature plantation and stable retained earnings suggest effort to stabilize operation amid ongoing challenge. Moving on into the next analysis in the balance sheet is about the trend analysis. So beginning with asset, the first account is cash and cash equivalents is dropping in 2022 due to the cost like legal fees and also settlement, but improved slightly in 2023. Trade receivables is spiked in 2022 due to delayed payments from buyers but decreased in 2023. Biological asset is declined in 2022 is likely due to the restriction from the land disputes with some recovery in the next year. And for the prepaid taxes is also reducing, reflecting that the company adjustment in tax planning related to the land conflict liabilities. And for the mature and immature plantation, the company focused more on mature plantation due to the limitation on expansion from the land issue. And moving on into the equity and liabilities, the first account is current liabilities is still dropped in 2022 but increased in the next year. This condition reflecting new financial obligation and settlements. And for the long-term bank loans, the company borrowing increased in 2022 to manage their cash flow but decreased in 2023 with repayments. And last, for the company retained earnings, they stay stable but showing the profitability despite financial pressure that the company facing from the land disputes. So what we can conclude in this analysis is the land grabbing issue has still caused the operational disruption, legal liabilities, and also financial strain for PT Astra Agro Lestari, as shown in fluctuating assets, rising liabilities, and also stable but pressured retained earnings. This trend highlights the long-term impact of unresolved conflicts on the company's financial stability. Okay, let's jump into the last analysis for the balance sheet, which is about the common size horizontal analysis. So again, beginning with asset, the cash and cash equivalent is dropped in 2022 due to the legal and settlement costs but improved in 2023, showing better financial management. And for the trade receivables, is increased in 2022 due to the delayed payments but dropped in 2023, reflecting better payments collections. And for the biological asset, is declined in 2022 from disruption caused by the land disputes but started recovering in the next year. And for the prepaid taxes, it's reduced due to the adjustment in tax planning linked to financial pressure. And for the mature and immature plantation, is the company also focus on mature plantation due to the challenges in expanding land affected by the conflict. And moving on into the equity and liabilities, for the current liabilities is dropped in 2022 but rose in 2023, reflecting new financial obligation and settlements. And for the long-term bank loans, the company increased in 2022 to manage their cash flow, but decreased in 2023 as loans were repaid. And for the other components of equity is decreased due to the financial pressure and reputational issues. So for the total equity is growth slowly due to the financial strain and difficulties in maintaining the profitability. So what we can conclude in the common size horizontal analysis for the balance sheet is the land grabbing issues has strained PT Astra Agro Lestari's financial stability, evident in fluctuating asset, rising liabilities, and also slowed in equity growth. This underscores the impact of operational disruption, legal costs, and of course the reputational challenges. Okay, now let's jump into the last financial statement, which is cash flow. So the first one that we're gonna talk is about the common size vertical analysis. For the operating cash flow, receipt from customer is dropped in 2022 as major buyers is stopped to purchase from the company due to the land grabbing controversy, with some recovery in 2023. And for the payments to suppliers and employee is increasing in 2023 because of the higher cost, including the compensation for the land conflicts. So overall, for the operating cash flow, it showed improvement in 2023 but still reflected the financial strain from the disputes. And for the investing cash flow, company spending on new plantation and fixed asset is stay low. It is showing caution for the company due to the limitation of expansion opportunities caused by the land issue. And last, for the financing cash flows, the loan repayment is increased significantly in 2022 as the company worked to reduce financial risk from the legal challenges. So financing activities saw some recovery in 2023 as liabilities is decreasing. So what we can conclude in this vertical common size analysis for the cash flow is the land grabbing issue is heavily impacted PT Astra Agro Lestari cash flow, leading to reduced receipt, higher operational cost, and also limited investment. So stabilization efforts in 2023 highlight that the companies attempt to recover from their legal and reputation challenges. Okay, next, into the next second analysis of cash flow, which is the trend analysis. The first one is the operating activities. Receiving from customer is decreased in 2022 due to the reputational issues, but recovered slightly in 2023 as the trust is improved. And for the payment to suppliers and employees is increasing in 2023 because of the settlement and also legal fees related to the land disputes. So the net cash provided by operating activities is improved in 2023, showing that the company have better cash flow management despite the higher cost. And for the investing activities, the first one, addition to fixed asset, is reduced in 2023, reflecting the company cautious investment due to the financial and operational pressures. And for the net cash used in investing activities is stay low, showing the limited expansion due to the uncertainties from the land conflict. And last, for the financing activities, payment of bank loan is increased in 2022 as the company worked to reduce financial liabilities caused by the land-related issues. So the net cash use in the financing activities is declined in 2023, suggesting that the company have better financial stability and they reduce reliance on external funding. reliance on external funding. So what we can conclude on this trend analysis of PT Astra Agro Lestari cash flow is the land grabbing issue has caused significant disruption in the company cash flow, with reducing the customer receipt, increasing the operational cost, and constraining the investment. So the recovery efforts in 2023 reflect the company improvement in financial management and their cautious spending amid in ongoing challenges. Okay, finally we are here at the last part of analytical tools and technique. For the common size horizontal analysis in cash flow, beginning with the operating activities, received from customer is dropped in 2022 due to the loss of buyers, but slightly improved in 2023, showing the effort to stabilize. And in payment to suppliers and employees is increasing in 2023 due to the cost from land-related conflict and settlements. So the net cash provided by operating activities is recovered in 2023, reflecting the better cash flow management and reduced in expense. Moving on into the investing activities. Addition to fixed asset is reduced in 2023, indicating that the company limited investment because of financial strain and land ownership uncertainty. So the net cash used in investing activities is stay low, showing the cautious spending amid challenges caused by the land disputes. And lastly is the financing activities. Payment of bank loans repaid in 2023, suggesting the effort to reduce long-term liabilities from the land-related issue. So the net cash used in financing activities is declined in 2023, showing reduced reliance on external funding and stabilization on finances. So the conclusion from the horizontal common size analysis in the PT Astra Agro Lestari's cash flow is the land grabbing issue significantly disrupted the company cash flow, with declines in customer receipt, constrained investment, and also rising in operational costs. So recovery effort in 2023 show improved management and a focus on stabilizing financial activities.
My name is Muhammad Zaki Farhan. We'll continue our presentation for final exam. Okay, here I will be explain about the financial ratio and sustainability report of PT Agro Lestari in 2023. Next, for this slide, we can see a summary of financial ratio from the liquidity ratio to valuation ratio, which will be explained one by one on the next slide. Okay, for the first ratio is related to the liquidity ratio, which is the ratio that assess PT Agro Lestari's ability to meet its short-term financial obligation. Here, there are three ratios that will be discussed. There are the current ratio, the quick ratio, and the cash ratio. The current ratio is obtained from current asset divided by current liabilities. The quick ratio is obtained from the current asset minus inventory divided by current liabilities, and the last cash ratio is obtained from cash divided by current liabilities. Okay, we can see that the current ratio has decreased quite significantly, which indicates that the company has fewer current assets compared to its current liabilities in 23 compared to 2022. This is due to a significant decrease in current assets in terms of inventory and an increase in debt due from long-term debt. Then for the quick ratio, this is a decrease was caused by an increase in debt due from long-term debt. Although cash and cash equivalents increased, the increase was not large enough to cover the increase in debt. Finally, for the liquidity ratio, the value is less than 1, especially the cash ratio. It indicates that the company is unable to pay its short-term debt through highly liquid asset, which is cash. So the conclusion through the liquidity ratio that has been analyzed, PT Agro Lestari doesn't have much ability to pay short-term debt, especially through cash, which is the most liquid accounts. Okay, next ratio is the activity ratio. In this ratio, we assess how effectively PT Agro Lestari manage its inventory, receivables, and fixed asset. The ratio analyzes our net working capital and inventory turnover. And net working capital is obtained from the difference between current asset and current liabilities, while inventory turnover is obtained from COGS divided by average inventory. Through net working capital, we can see that PT Agro Lestari has decreased by 6.56%. This is due to an increase in current liabilities from long-term debt due in 2023. However, with this net working capital figure, the company is still experiencing positive working capital. Then, from inventory turnover, we can see that there is a slight decrease of 0.18% in this ratio, which indicates stability in inventory management. This means that the company's efficiency in selling its inventory has not changed much. A ratio of 5.71 is a fairly healthy level considering the industry is at 4. Next, the third ratio is the profitability ratio. In this ratio, we assess the ability of PT Agro Lestari to generate profits from its various business activities. The ratio analyzes our profit margin, gross profit margin, ROA, and ROA. For profit margin and gross profit margin, it can be seen that this ratio has decreased due to a decrease in sales of around 5%, and the figure for each of these ratio are quite small because when compared to sales, the company only managed to obtain a profit of less than 20% for its gross profit and net income. Next, for ROI and ROA ratio, that ratio shows the company's ability to generate profits from its assets and equity. A decrease of 3% from ROA and 4% from ROA shows that the company is less than optimal and efficient in using assets and capital to generate net income. Okay. Next, for the solvency ratio, we will assess PT Agro Lestari's ability to meet its long-term obligation. In this ratio, the debt to asset ratio and debt to equity ratio are used. In debt to asset, it can be seen that PT Agro Lestari's ability to pay off its long-term debt can be said to be quite good because it is below 0.5 and it's quite stable in 2022 and 2023. Then for PT Agro Lestari debt to equity, it is also quite good because the ratio between debt to equity is only 13% and 70%, so that in terms of funding risk, PT Agro Lestari is considered quite safe. Lastly, valuation ratio is used to assess the health of the company compared to the market value. In this ratio, PR and PBV are used to see whether the price or value of the company is under value or overvalue or fair. For PR, this ratio has increased significantly to 37.18%. This indicates that the stock price relative to EPS is more expensive in 2023 compared to 2022. This increase may reflect market optimism about the company's future growth profits or a trend of faster stock price increase compared to profit growth. Then the PBV ratio actually experienced a sharp decline of 42.88%, indicating that the stock price relative to the company's book value become cheaper in 2023 compared to 2022. This decline may indicate that the market views the company's asset as less valuable than the previous year, or potential doubt about the efficiency of the company's asset use. Okay, next I will discuss the sustainability report. Uh, the following is the PT Agro Lestari 2023 Sustainability Report, which is prepared to illustrate the company's commitment to implementing environmental, social, and governance ESG practice. The company implements sustainability through six main pillars that are in line with the Global Reporting Initiative or GRI standards. The first pillar is the environment and climate change pillar. This pillar focuses on PT Agro Lestari's efforts to manage environmental impacts and climate change. In the sustainability report, PT Agro Lestari will likely use GRI 305 emissions to measure and report reductions in greenhouse gas emissions resulting from its operation. Meanwhile, for GRI 3.2, energy is its content about energy is used to measure energy consumption and the company's initiative to switch to renewable energy sources. Okay, next for the second pillar is the smart operations and product governance pillar. This pillar highlights operational efficiency and responsible product governance. GRI 416 about customer health and safety, and GRI 417 about marketing and labeling can be used to report policies related to customer health and product safety, as well as transparency of product information related to sustainability. Okay, for the third pillar is the human resource pillar. This pillar focuses on employee welfare. Astra Agro Lestari main focus is the reduction of lost time injury frequency rate or LTIFR by 64%, reflecting a significant improvement in occupational safety in accordance with GRI for uh, 403 about occupational health and safety. Then the company also invests in employee training and development, reflecting a commitment to increasing workforce capacity relevant to GRI 404 about training and education. Inclusive policies such as gender equality and equal opportunities for all employees demonstrate a progressive approach to human resource management. Okay, next for the fourth pillar is the community development pillar. This pillar describes the Agro Lestari's contributes to the development of the surrounding community through corporate social responsibility or CSR programs. Initiatives related to education, health, economic empowerment, and environmental protection can be part of this program. PT Agro Lestari will use GRI 413 about local communities to measure the company's impact on local communities and assess its involvement in social and economic development. For the fifth pillar is economic development pillar. This pillar focuses on PT Agro Lestari's economic impact on local and national economies through job creation, support for local supply chains, and contributions to infrastructure and sustainable economic development. The company aims to create positive long-term impacts through GRI 201 about economic performance is used to report the company's economic performance, while GRI 202 about market presence and GRI 203 about indirect economic impact measure the company's contributions to local sector and the indirect economic impact of its operations. Okay, for the last pillar is governance. These governance pillars emphasize transparency, accountability, and ethics in corporate management. PT Agro Lestari likely highlights policies supporting ethical and transparent decision making, as well as the implementation of control mechanism to prevent corruption. In this context, GRI 102 about general disclosure provides an overview of the company's governance structure, while GRI 205 about anti-corruption outlines the measure taken to prevent and address corruption. Okay, for the conclusion is that PT Agro Lestari's 2023 sustainability report likely covers various aspects of sustainability that align with GRI standards, from environmental impact management and social responsibility to transparent governance. Each pillar described above, from emissions management and employee training to community development and economic contributions, can be measured using relevant GRI indicators. This provides a clear structural view of how PT Agro Lestari is committed to responsible sustainability and positive impacts across various sectors. Okay, last slide. As a conclusion to our entire discussion, it can be seen that based on the financial quality analysis that we have been made, it can be concluded that PT Agro Lestari is at a level 2 of the financial quality spectrum within GAP, but its profit quality is low. The profit quality of PT Agro Lestari in 2023 relatively poor, as evidenced by the sharp decline in profitability and the increase in operating costs. The decline in gross profit and net profit indicates that the profit generated from the company's core operations cannot be relied on for the long term, with a significant downward trend from year to year. Then, from the concise analysis, profit decreased by 5% in 2023 due to the decline in CPO prices and the damage to the company's reputation due to land grabbing issues. This caused several major buyers, such as Pepsi and Nestle, to terminate their partnerships. Production costs increased due to operational instability and reduced efficiency related to land conflicts, causing gross profit margin to decline from 17.51% in 2022 to 13.36% in 2023. Current assets decrease and short-term debt increase, indicating greater liquidity pressure for the company, partly due to legal costs and compensation costs related to land dispute. Operating cash flow improved, but pressure on investment and financing activities remained, partly due to reputational issues that hamper further investment. Furthermore, from the trend analysis in 2023, PT Agro Lestari experienced a downward trend in revenue, gross profit margin, and net profit due to falling CPO prices and rising production costs, which caused a 39.28% decrease in net profit. Despite these challenges, the company saw an increase in operating cash flow, increasing by 38.32% due to better cost management. However, negative cash flow from investment and financing remain despite significant improvement in debt and dividend management. The main problem was the combination of lower revenue and higher costs, which pressure profitability despite efforts to improve cash flow. Finally, from the financial ratio, overall the ratio decreased, such as the activity ratio, profitability ratio, liquidity ratio. However, in the solvency ratio, the ratio is constant. There is no change in 2022 until 2023. This shows that the company's financial health is not good. For the valuation ratio 2, PT Agro Lestari shares look more expensive than PR, and the decreasing PBV shows that the stock performance has also worse. Okay, maybe that's all from me and my team. If there are any wrong words, we apologize. Thank you.